Hi friends, Simit here from InformedTrades.com. Today's Wednesday, May 14th. Time for our daily Forex chart review. Basically, in these sessions, I share the trades I'm placing, adjustments, excuse me, adjustments to existing positions that I put on the market. You can sort of watch me trade, watch what's going through my head, learn from my mistakes, learn from my successes. We can all learn together. Of course, if any information I'm presenting is unfamiliar to you, or you want to explore other styles of trading, other markets, check out InformedTrades.com. We have a huge archive of learning material that we're constantly adding to. Check it out. Share your knowledge, register for practice accounts, set up a blog, share your trades. We can all sort of learn together. Okay, let's take a look at the charts. Okay, right now on the screen you should be seeing a chart of gold. I always like to start with gold as I have a long-term position in gold. I'm very bullish on it for fundamental reasons. Of course, I'm interested in looking at technicals too to get an idea of timing. AB equals CD pattern, I don't know if we're going to, so this AB equals CD pattern, which I drew going back here, that's sort of forecasted about 1450 by mid-June. That seems a little ambitious now, whether we can go, $150 in a month. Definitely a couple big days and we'll be there. Let's see, though. In the near term, we need to make sure 1280 is held. The bulls do. If 1280 breaks, you can make a pretty convincing argument, in my opinion, that we're still in a downtrend. The downtrend is alive and well. That will put the next target at 1180 down here. In terms of the bulls or something to watch is if we can clear the 50 simple moving average and the 200 exponential moving average. It's major resistance right here. So if we can get above 1340, then that could be smooth sailing to around, right around here, 1380. So that's a key level to watch. The bullishness that we're seeing in the ongoing defense of 1280, that's positive for the bulls. Okay, that's gold. Let's take a look at some of the Forex charts that I have on, the Forex trades that I have on. Now, I am at full risk exposure, which means what I mean by that is I have 7 trades on at the moment. 3 of them are at break even. Now, when I say they're at break even, I mean my stop, the position has advanced in my favor, and I move my stop to the point that I entered at. That means if the price comes back and hits my stop, I will not lose any money. Of course, I won't gain any money either, but I won't lose any money. That trade has been de-risked. I really don't want more than 4 trades on at a time that have not been de-risked. So basically, I'm risking 1/4% per trade. I don't want to lose more than 1% of my account balance at any time. If all my positions got hit instantly, my account balance should not decline by more than 1%. That's my rule of thumb. I know I mentioned that every video, but that's a really important concept in trading risk management. So I'm at full risk exposure, full risk capacity. Don't have room to put on any more trades. Canada Swiss, this is a trade that has been de-risked. Let's start with the trades that have been de-risked. Once you close, when I put on a trade, I'll plot my entry line. The dashed orange line is the break-even line. I want it to be a minor resistance level. The price closes at or above, and of course the target profit. So we've closed at or above this orange line, which means I move my stop to break even here. My target profit is still here. That trade has been de-risked. Now, of course, we will deviate from the situation at times, and we'll get to a potential situation later where I might deviate. We'll see. Pound Aussie. Okay, this is also a trade that has been de-risked. I'm going short here. We talked about the logic here. We're in a clear downtrend. Really nice reversal candlestick here at the 50 simple moving average at a 61.8 Fibonacci retracement level from where did this go? Oh, that was like well, at a retracement level and a horizontal support level. So I got here. And then the target profit is this green line right at the 200 exponential moving average. We will also still have a reward risk of 3-to-1. Now I may actually take half off here. Let's see how price goes. It may take half off here and see if we can target a further move down. That's something to consider in the trading days ahead. Maybe today is something to consider because we might get to this price target tomorrow. Pound yen. Now this is another trade that has been de-risked. However, yeah, pretty strong down day today. I might close this out. I'm tempted to close this out. But we'll get to why. Remember, this is pound yen. We'll get to why I might close this out a little bit later. Let's look at some of the other trades I have on that have been de-risked. Where's that it? Yeah, I think that's it. So Canada Swiss, Pound Aussie, and Pound Yen. Those are my trades that have been de-risked. Now for the trades that have risk on. One is Euro Yen. And I've had this trade on for a month now. Still struggling with the yen. You know, we've talked about the fundamentals on the yen quite a bit. This is pretty close to hitting my stop. We are now 13 pips away from hitting my stop right here. Now, chances are, if my stop gets hit, which it looks like it will, let's actually take a look at the hourly chart. This will give us a better idea. Okay, so it came within a couple pips right here. So you see we have a long wick here. It might hit my stop, and if it does, chances are, one thing is, and now I have my stop is not a break even here, right? So I will actually lose money if the stop is hit. And that's why I might close out my pound yen position and possibly even my dollar yen position, because I'm losing a little bit of confidence that now is the time to go long the yen, at least based on these trades. I thought this consolidation that we were seeing was setting up for a long move, but we'll see. Now it's starting to look a little more bearish. Prices below the 50 simple moving average, where we had a long period of consolidation, but we weren't able to close above resistance, and now we're moving down. So that's a little discouraging from a bullish perspective. My pound yen and dollar yen positions are slightly in the money. So if my stop on euro yen gets hit, I might just close them all out, and I'll basically break even, make a little bit of money, not much. But of course, de-risking the trade is the most important thing. Let's see, though, maybe euro yen will reverse. I don't want to prematurely close it out because I'm panicking. Don't really want to make decisions based on panicking, but want to make them based on logic and risk minimization, and risk optimization. So that's euro yen. There's also Kiwi dollar. This is a trade I entered a couple days ago. So far, so good. You know, we had a pullback here near the 50 simple moving average, had some candlestick consolidation, big candle here. That's all good and well. As we close, if we can close at or above this orange line, then the trade will be de-risked. Hasn't been de-risked yet. Okay, now next up is dollar Canada. Pattern of lower lows, right? This low is lower than this low, and lower highs. This high is lower than this high. So we have, it could actually, well, I don't want to draw too many lines, but something just to illustrate, and I'll probably delete this afterwards. These charts are from tradingview.com, by the way. Really love these charts. They've helped me out quite a bit. This is like a tentative channel. I wouldn't give too much faith in, but it illustrates the idea. We have a pattern of lower lows and lower highs. So that shows sort of the downtrend prices below the 50 simple moving average. That gives us an idea, or at least illustrates sort of what I'm thinking here. I'm going to delete this channel now. Okay. And we see these, candlesticks are still, this level here, this dashed gray line is serving as resistance of sorts, going back here, February 19th. Sort of established that as a key resistance level. So we'll see. This position is not ready to be de-risked yet. It's still need a price to close at or below this dashed orange line, but so far it's acceptable. And dollar yen. Now, like I mentioned, if my euro yen position gets hit, I may just close out my pound yen and dollar yen position, and then I'll be, basically at break even. But here we can see what's going on here. Not the most encouraging price action. We really hit the 50 simple moving average and are coming down pretty strong off of it. I entered here at this black line, so still slightly in the money. The orange line is where the trade will be de-risked, but like I mentioned, this is not the most encouraging price action that I was anticipating seeing on the end, so we'll see. It might be time to close that out. But that's about it. No real action today. The one thing I would note is that if somebody who watches my pound Australian dollar position, which might be ready to be de-risked tomorrow, as well as my yen positions, which might get closed today, if any of that occurs, then I'll have some risk available, and I'll be able to check out other trades. That's sort of where I'm coming from. Anything you want to add, any questions you have, check out InformedTrades.com. That's about it for today. Best of luck in your trading, and we'll see you tomorrow. Take care.